So we have this huge, broad asset class universe of 23 countries, so thousands and thousands of opportunities. Our approach is a very high conviction portfolio of the very, very best hand-picked ideas in emerging markets. And so we're able to navigate the issues of external forces, commodity prices, sovereign risk, changes in government, and so on. And necessarily that means that we're long-term investors. So we're looking for the very, very best ideas in emerging markets, fantastic businesses that can grow shareholder value, reinvest in the business with top-line growth. And we will hold those businesses preferably for as long as possible. Our average holding period is 3 years. If we find really, really great ideas, we will hold them much longer than that. It's ultimately the combination of volume growth, which is something which is very, very scarce in developed markets. So here we're talking about toothpaste in India, shampoo in Korea, these kind of long-term structural changes, cosmetics demand in China, combined with businesses that earn high returns on capital. So these are businesses that create shareholder value. If you get the combination of volume growth and high returns on capital, that's nirvana. And this is what drove developed markets 30, 40 years ago. And it's become very, very, because of aging populations and demographics, it has become very scarce in developed markets. But that is something that emerging markets still offers, and that's what we're looking for in our portfolio. A big challenge within the asset class remains governance. And again, this is why we take a very, very high conviction approach. So if you look at Viktor Orban in Hungary, Erdogan in Turkey, to some extent, to a lesser extent, Bolsonaro in Brazil, this is an issue. I mean, this is a very broad asset class, and governance standards, both at the country level and at the company level, vary tremendously. So for us, with a very high conviction approach, it's about being on top of these developments and making sure we invest in the very, very best sovereigns. So currently we have nothing in Turkey, nothing in South Africa, and nothing in Hungary. And investing in economies where actually governance is improving, because ultimately that improvement in governance, as we've seen in South Korea over the last 20 years, results in a lower discount rate and a strong tailwind for equity performance.